It's 10 a.m. in Lagos, Nigeria. That's the time to delve into the world of business on Business Morning here on Channels Television. You're welcome. I'm Ini John Mekwa. Well, let's start from Nigeria. This time, the latest air transport report by the National Bureau of Statistics indicates that between January and December 2021, air travelers rose to 15.23 million from 10.55 recorded in 2020. The figure, which includes domestic and international passengers, shows that air travelers across Nigerian airports rose by 44.36% as of the end of 2021. Details of the report show that domestic air passengers rose to 13 million in 2021. That's up 9 million in 2020. Outside Nigeria, oil prices traded higher, but in a narrow range today after being rocked earlier in the week by supply losses from Libya and a worrying outlook for demand as International Monetary Fund cuts its global growth forecast. Brent crude futures rose 55 cents to $107.35 a barrel, recouping losses from the previous session. U.S. West Texas Intermediate crude futures gained 41 cents to $102.60 a barrel, and that's adding a 19-cent gain in the previous session. When analysts say that market volatility is likely to pick up again, with the European Union still weighing on a ban on Russian oil for the invasion of Ukraine. Libya, a member of OPEC, has said that the country was losing more than 550,000 barrels every day of oil output, and that's because of the blockades at major fields and export terminals. Well, we're going to follow up on that conversation about oil volatility and related issues on our commodity segment, and we'll be doing that with Adesola Sumoni. He is in Reading in the UK, and we'll do that after the break. To join us again, this is Business Morning on Channels Television. Welcome back. Well, following up on that oil conversation, we have Adesola Sumoni joining us now, our second time this week. Good morning, Adesola. Good to have you again.
Good morning, Hini. Thank you for having me on the show.
Yeah, so, on Tuesday, we talked about the issue with Libya's biggest oil field. It seems the after effect of the closure is feeding into the supply and prices globally now.
Yes, indeed it is. And the situation in Libya is, I think, is worsening. We are seeing more and more closures. Now, two major oil fields have been closed in Libya, and the state-owned oil companies saying that we expect more oil fields to be closed due to, protests and demonstrations at, major oil fields and export terminals. And for Libya, it's quite unfortunate because this is also a time of higher oil prices. And like I mentioned on Tuesday, Libya is one of the members of OPEC, and they produce around 1.2 million barrels of oil every day. So if you take off like 50% of their production off the market, and then you begin to see some effects on the global commodities prices. And this is also taken into context an already tight market due to the Russian war in Ukraine, among other factors.
And then on top of that, we have oil stockpiles in the U.S. slumping.
Oh, yeah. The U.S. crude stockpiles simply tracks, demand-supply dynamics in the U.S. market. And this last week, figures for last week showed a 8 million barrel drawdown in crude stockpiles in the U.S., according to the Energy Information Administration, which suggests, again, which underlines the argument of a tight supply in the global market, and that is also bullish for prices. That's why we saw prices, inch higher this week.
And in the midst of all this, I was surprised to see this report to say because IMF is upgrading growth rate for Nigeria to 3.4%, and I'm surprised about that because we know that last month alone we had, I think, 2 force majeure, and at the end of the month, OPEC report showed that we were losing 774,000 barrels of oil every day. We couldn't meet up with our quota, even though OPEC has increased our quota. So how are we going to meet up with this increase in growth rate? It just doesn't add up from my own perspective. Maybe you should tell me more.
Okay, so first let me say that there's a lot of uncertainty now surrounding forecasts, right? Given the kind of situations that we have. Well, mainly the reason why OPEC, no, IMF revised upward Nigeria's GDP growth rate was mainly because of the higher oil price environment, and Nigeria being an oil exporter, they expect that with the higher oil prices, Nigeria's export revenue should increase, and Nigeria's oil GDP would increase, and that would filter into a non-oil GDP, the external reserves, exchange rates, and things like that. So that's the argument. But again, there's a lot of uncertainty. Like you mentioned, Nigeria is struggling to increase its production. I mean, for March, Nigeria's production, according to OPEC, was around 1.3 million barrels per day. And OPEC already, during their last meeting, revised upwards Nigeria's production quota to 1.7. You also mentioned about two force majeure. So I think there are issues for Nigeria to be able to ramp up production, to be able to take advantage of this high oil price environment.
And it's also very, standing out there because World Bank is downgrading world growth outlook. Even IMF is downgrading world. Fitch has also released a downgrade of world. So in the midst of that, then we see Nigeria being upgraded, and it's just... And then you don't forget that we have subsidy to deal with. So if we want to talk about growth rate, is it not important about, what we're using for subsidy, which has increased, with the rising price of oil? So, you're looking at the balance.
That forecast was heavily caveated, right? It's almost like, take this with a grain of salt. We expect, based on economic theory, that with the higher oil price environment, or basically intuition, that with the econometric models forecast that with the higher oil price environment, Nigeria's GDP growth rate is expected to increase to 3.4% for 2022, up from 2.7% that the forecast earlier. But then you need to take all of this in context of the global economy. Like you mentioned, all multilateral organizations are revising downwards global growth rate, and for obvious reasons, the Ukraine-Russia war, which is affecting. First of all, we expect big declines or big contractions in the GDP of both countries, particularly for Ukraine. But also we expect the effect to filter to the global economy through two main channels. One is the commodities market. Two is trade. And those factors also have bigger issues for food security. We are seeing the price of commodities in many countries. We are seeing the price of commodities in the global market reach record high levels, which has implications for food prices in many domestic economies. We are also seeing oil prices increase really, really sharply and reaching record high levels, which again has implications for inflation for many oil importing countries. And then those factors have inflation for the pace of the pace at which central banks in advanced economies would tighten their interest rates, and which has further implications for emerging market economies in terms of their debt, in terms of their capital flights, their exchange rates, and pressures on their external economy, their external sector.
Exactly. MPC is next month, so we wonder if our interest rates will be jacked up. But I mean, closely related to the oil, we see natural gas drops 10%. I'm almost sure this is connected to the Russian invasion in Ukraine.
I would say it's mainly driven by technical factors. Ordinarily, we've seen sharp increases in the price of natural gas due to the Russian war in Ukraine. But we just saw a correction, I think, earlier this week due to technical factors. I mean, traders are kind of taking profit, but also the expectations of a build-up in natural gas stockpiles, because demand remains strong. We are seeing, huge arrivals of natural gas at export terminals. We are seeing we expect a colder spring is also underlying demand for for natural gas. So I'll say that what we see is just a correction due to technical factors. The outlook, traders, investors are still very, very bullish on natural gas prices, and natural gas prices are going to remain elevated in the near to medium term.
Where is Nigeria in this natural gas picture at this time?
Well, for Nigeria does produce some natural gas. So with the price being elevated, I think it's positive for Nigeria in terms of some export revenues, which is also good for our external reserves and our exchange rate.
Then moving away from the oil and gas, we see it's planting season, and it seems to be affecting corn. Even though back here in Nigeria, I guess this is more about the US, but back here in Nigeria, even before now, before the war and all of that, we had the issue with corn, maize, and then we had feed millers and a lot of manufacturing companies feeling the impact of that.
So starting from the global commodities market, for corn, Ukraine and Russia are top 20 largest producers of corn globally, right? So now with this, crisis is affecting the supply of corn from these countries, affecting exports of corn, that's affecting also the supply chain of corn. And that is part of why we are seeing the prices of corn increase quite sharply. But even before the war, there was issues of inflation, there was issue of supply chain disruption, which was also mounting upward pressure on corn prices. And then there's currently a planting issue or a drought in the US, which is delaying the planting of corn, which is also mounting upward pressure on prices. In terms of Nigeria, we're also having upward pressure on the prices of corn, and that like you said, affected the price of feed, which affects what goes into the chicken, which affects the eggs also. And that has also pushed prices upward, and that is reflecting in headline inflation numbers. We saw inflation numbers increase in Nigeria to I think 15.92%.
Yes. 92, yes.
Yes, for March. And part of the drivers, apart from diesel, is also food prices. So that was that.
Yeah, so with this planting season and the war and, after effects of the pandemic, what's your outlook for this commodities space, especially for this planting season?
Right now, I'll say that outlooks, again, should be taken with a grain of salt, right? Because it's dependent on many factors, right? It depends on whether, the Russia crisis escalates or it de-escalates. It depends on also the contagion effect of that. So I think for now, with many economists planning or aiming to increase sanctions on Russia, I think we expect upward pressure on commodities market to persist in the near to medium term. I think that's the general outlook, that we expect this upward pressure to persist.
Okay. Anything else happening in the commodities space at this time?
I would link everything back to this IMS World Economic Outlook and focusing on emphasis on food insecurity, right? Like I mentioned, one of the indirect effect or one of the contagion effect of this Ukraine-Russia crisis is on the commodities market, and that's mounting upward pressure on many commodities, particularly wheat and corn, but also on oil. And this is affecting the prices of food even in local economies, and that has implications for it is the effect, is stronger for low and middle income countries and importers of these commodities, because now it is pricing out these commodities or these food commodities out of the hands of poorer household members in these low and middle income countries. And that also has implications for food insecurity. That has implications for the governments now, because the governments have a trade-off, difficult trade-off to take. I think the fiscal authorities, they have whether to provide some social protection for their members, some form of like cash transfers or some form of social insurance to mitigate the effect of this spike or this hike in food prices. But also on the other hand, they also have to consider how to rebuild their buffers, their fiscal buffers, after spending a lot and borrowing a lot during the pandemic. So that's the big issue, I think, in the commodity space, food insecurity, particularly for low and middle income countries.
emerging economies especially. Thank you so much, Adesola Sumoni, for giving that analysis. Obviously, food security is what we'll keep talking about, because that's the first thing. Thank you so much, for joining on the show. Enjoy the rest of your day.
Thank you for having me. Bye-bye.
We'll take a break now. When we come back from that break, we'll be heading to the markets. Which of the markets? Find out. This is Business Morning on Channels Television. You're welcome back. Well, 8 years after it was proposed, the Nigerian Exchange Limited has formally rolled out West Africa's very first exchange-traded derivatives as the ETD market. A new asset class expected to provide local and foreign investors with new opportunities to hedge against risks. Well, we have with us, joining us virtually now, the Divisional Head Capital Market for the Nigerian Exchange Limited. We have Mr. Jude Chiemeka joining us now. Good morning, Mr. Chiemeka. Thank you so much for your time this morning.
Good morning. Thank you for having us.
Good to have you. So I guess the first question will be, why did it take so long, 8 years?
Well, the conversation, like you said, started 8 years ago, but there were certain things that were not in place that needed to be in place, especially around the rules governing the players, the trading license holders, to ensure an orderly market. And so the heavy liftings were really around the regulatory framework, which eventually got incorporated into the newcomer, which allows netting rules to ensure that there's a legal framework for the contract of derivatives. So on the back of that, the integration between the NGS trading system as well as the CCP also had to be in place to ensure a seamless trading and settlement process flow. And so all that, and also there's also the elements of the clearing banks, since the instruments themselves are cash backed. And so the clearing banks, Access and Zenith Bank will be involved in the cash settlement of derivatives. So all of that obviously ensured that we have a system that can trade in a seamless manner, and investors are well protected around the rules. Also, NGX have to come up with the rules for the markets to ensure that the conduct of the trading license holders meet the expectations of the investors.
So now that the derivatives market has been launched, what should we expect? What's going to be different?
Derivatives obviously completes the markets in the sense that it allows investors to have an instrument to hedge their portfolios, especially around the volatilities that we do see in our markets. And if you then look at other markets, even in Africa, Nigeria is the second largest stock market in Africa, but up until now, we didn't have a derivatives market, but you do have derivatives market, even in markets like Kenya, Mauritius. Obviously JSC is the leading derivatives market in the continent, but the adoption of derivatives allows investors to be able to hedge their portfolios, and it also allows investors to have a view without necessarily putting up all the cash like we do today, where we have a cash equities business where you have to put up all the capital to be able to take position in a particular security. With the introduction of derivatives, it becomes very easy for clients or investors to take a view and be able to express such views by committing very little capital. So it's something that we're really excited about, and we believe that what we have started with, which is the index futures, are the safest of the derivatives instruments that will allow investors adoption to be fast and also become familiar with all the various elements around derivatives, so that we can then go into more exotic side of the business, especially around single stocks derivatives, which will then begin to attract international play in our markets.
Yeah, talking about attracting investors, both local and international, what's the game plan?
Okay, so Nigerian Exchange Limited is really committed to using technology to drive participation. If you look at our market historically, we have a 50-50 split, international, usually international institutional investors, about 50% of the market, with the issues that we're having now around FX, macro, and insecurities in the market. That market today is less than 30%. It's down to actually 22%. So what we're doing is really to improve domestic participation, especially in the area of retail investor participation. We're really strong on that, and we're trying to use technology to drive participation. We have over 3 million registered retail investors in the market, but we do have less than 200 active investors today. So with the help of technology, we're hoping to improve the participation of local investors in the market by introducing new products, especially these derivatives will allow them to be able to hedge and also take positions, like I said, without committing all the capital. So all of these initiatives that we're working on and also trying to introduce new products that will also mitigate against FX volatility that we do see as a major challenge for local investors. So we believe that all the various baskets of products that the exchange is working on, especially leveraging technology partnerships with other exchanges. We're a member of the World Federation of Exchanges, and we're really active just trying to drive partnership with other exchanges to ensure that the products that we offer are world-class. As you know, we have the SGen, which is powered by NASDAQ, and that is a world-class trading platform that continues to provide integrity and confidence in the market. With the introduction of derivatives, this has led also to the formation of the CCP, and the CCP in itself offers a lot of advantages in the market apart from even derivatives.
So in that group of investors, how much attention are you giving to the Gen Zs? Because they seem to be driving a lot of markets now. We talk about crypto and they are there. How much attention are you giving to that group of investors?
Yeah, we're really concerned about the participation of that group in the products that we provide. Average age in the market is about 50 years. So we are really leveraging partnership, especially in the area of capacity building. Apart from products that will meet their needs, we are also very huge in partnership, and we are doing a lot around capacity building for them to even understand the dynamics of the market. And then the ease of adoption in terms of ease of participation. We did see a lot of participation even from that group during the MTN offer. So working on new listings, new exciting companies. We're working on a technology board that will allow all these tech companies to be listed. We do find that they have interest in such companies. And so we believe that having all these various products, an array of companies that they are interested in, and more importantly, having the backbone, the strong technological backbone to be able to open an account, trade in a very seamless manner, is a key factor to attracting this group of people. And we'll continue to engage to ensure that they're not left out.
All right, you mentioned partnership. Tell us how the NG Clearing partnership is supposed to drive market participation.
All right, so the CCP, which is the counter clearing party in this case, will help to ensure that there's orderliness in the sense that they will provide the backbone that will help prevent credit risk, because these are contracts, and the contracts themselves, someone has to mitigate to ensure that there's no issues around settlements when the contracts do mature. And so the CCP offers that, and they provide the margining collateral for participation in this market. They will also do the regular mark-to-market and ensure that if there's some information flow, and they work with the clearing banks to ensure that when the contracts do expire, the parties that have participated will more or less get the benefits of the position they have taken as the views crystallize. So the CCP in itself also can be utilized even in the area of margining. Margining, as you know, was very huge in the market at the time when it was available. We didn't have the CCP, so there was a lot of fingers that were born. But with the introduction of the CCP now, it becomes very easy for investors to participate even outside of derivatives in the market, ensuring that they do not exceed their limits, the margin calls around the mark-to-market that are done regularly. So they are not over trading and overstretching beyond the capital that they have committed to the activities that they're doing. So the CCP really helps to improve market integrity and overall confidence in the market.
All right. Thank you so much, Mr. Jude Chiemeka, the head Capital Markets Nigerian Exchange Limited. Thank you. And we do wish you the best with the derivatives market, and we'll follow that progress. And certainly we'll have you back again to bring us up to date on that. Enjoy the rest of your day.
Thank you so much.
We're still in the markets now. This time we have here in the studio, Aniti Edit. Aniti, how was the market yesterday?
Yes, good morning, Ini. Second trading day in the week, and the market, the equities market, is still in the green, sustaining that the gain that we saw on the start of at the close of Tuesday's trading session. Of course, we had more than 300 billion naira gain recorded. But before I go to that market, let's go first to the fixed income market, where it was bearish sentiment. At the bonds market, first we had a total number of deals. It was just two instruments that were traded yesterday. 23rd of March 2025 had 1 deal, and the 27th of March 2035 had 3 deals. So that's all for that market. Of course, we saw some some sell pressure. Investors sold off the March 2027 paper, 15 basis points. That's how it increased. The February 2028 paper, that bond, it was at 8 basis points, and then it remained flat at the long end. But moving over to the Treasury bills market, it was also very sentiment. Average yield there expanded by 32 basis points to about 3.6%. But over the board, what you have here, the total number of deals was mostly carried out on the 11th of August 2022 paper. Total number of deals carried out in the entire that market there was 35, worth about 73.48 billion naira. Moving over to the open market securities, it's not too much, but we had an increased number of deals there, 12, and then the highest there was on the 14th of February 2022 paper. That's what we had for that market. And then for the central bank special bills, only 1 instrument was traded, which was the 30th of May 2022 paper. It had 2 deals, and that's worth about 4 billion at the close of midweek trading session. So we would have our analyst to speak with us. Caleb Alimi is a fixed income dealer at FSDH Merchant Bank. If we have him there virtually, maybe he can speak to us more about that market. But before that, before we have that conversation with him, let's move over to that equities market, which gained about 319 plus billion naira. And that came largely on the back of gains from another telecom sector component, which is Airtel Africa. Last week, and I think up until the first trading day of this week, what we had was mostly the shares of MTN rallying the market in terms of valuation. So now this time, Airtel did that magic, as well as a list of 27 other gainers, including the likes of Dangote Cement, the likes of Guinness, and so many other bellwether components. So that rallied that market by 1.25% at the close of midweek trading session on the NGX. But let's take a look at the sectoral performance. It's quite of a mixed bag, but it's the Greens still have it, particularly on the oil and gas sector, which some components there were the ones that rallied that market. And then coupled with the consumer goods sector, like I mentioned, Guinness Nigeria was what really pumped up that market. Then looking at the industrial goods sector, like I mentioned, Dangote Cement. So now let's get back to the fixed income market, where I talked about analyst Caleb Alimi from FSDH Merchant Bank. Thank you for joining us, Caleb.
Thank you for having me. Good morning.
Now, well, yesterday, yes, we saw kind of a pickup in the market, but it was still bearish sentiment. So can you give us more insight into that market at the close of midweek trading session?
Okay, thank you for that. So we did see bearish sentiments across the fixed income market, and we expect that to sort of like continue on the back of expectations of higher interest rates due to the borrowing program of the government for the rest of the year. On the Treasury bills market, we did see, a bit of uptick in yields, and also in the bonds market, we're seeing demand for bonds at the long end of the curve between the 2042s and the 2050s. However, in the belly of the curve, the short to mid dated papers, we're seeing more sell-offs around that side, and we expect it to continue, because we largely expect higher interest rates as the year winds on, and also system liquidity begins to wind down, begins to dwindle. We expect that the DMO is going to float 225 billion worth of bonds or thereabouts next week Monday. We're expecting a bond auction next week Monday, and we're expecting them to float about 3 different maturities: a 2025, a short-dated paper, a 2032, a new 10-year paper, and then the reopening of the 20-year paper, 2042. So we expect to see those 3 come to around 225 billion, which is largely about 75 billion more than what they offered, last month. Those are part of the things that are leading to the increased demand or increased appetite for higher risk, for higher interest rates, and that's why we'll continue to see yields continue to tick upwards.
Okay, so now if I may ask you, do you think investors are really keen on the fixed income markets? And if they are, which of those instruments was most likely to, attract their appetites at the moment?
Yeah, investors are interested in the fixed income market, but like I said, they keep demanding higher interest rates, largely because of the expectation of higher rates throughout the year. So yes, there's a bit of interest. We're seeing interest at the long end of the curve, largely from the real money buyers, like the pension fund administrators. We're seeing them, interested in 2042s to about 2050s, the long tenor papers at around 13%. And we expect to see that continue. But for retail investors, they'll look at, shorter dated papers around the 1-year Treasury bill or 1 year, 2-3 year bonds.
Okay, thank you, Caleb Alimi. And then, of course, we continue to keep our eyes on the markets, especially as we enter Thursday's trading session, and market is really in session. Thank you. So that was Caleb Alimi, fixed income dealer at FSDH Merchant Bank. So I was mentioning about the equities market before we went back to Caleb. So the equities market sectoral performance, it was mixed. And then in terms of the activity, it's all red across board, in contrast to what we had in Tuesday's trading session. Then also moving over to the smaller unlisted securities market, profit taking, it went down by 2.16%, quite a wide margin, because last week, yes, the market had rallied. It is a smaller unlisted securities market. We have some of those stocks which are on the NGX, some of them are here. And so, of course, investors here is a smaller equity, it's a smaller securities market, but of course it has some activities there. Then in terms of the volume, value, and deals, it's still smaller compared to what we had in Tuesday's trading session. So we keep our eyes out on what that market will turn out at the close of today's trading session. Fingers crossed, maybe it might be a rebound. You never can tell.
Yes, well, we'll certainly follow up on that bond auction we're expecting on Monday and see if investors will feed more on the long-term securities or the long tenure securities. Thank you so much for the update from the market, Anita.
A pleasure.
We'll take a break now. When we come back, we'll head to London. It's still here on Business Morning and Channel Television. You're welcome back. Well, we head straight to our London studio now with Juliana. Juliana, good morning. Good to have you this morning. And Barclays PLC has sold a 7.4% stake in former African unit Absa Group Limited, cutting its holding by half. Do we know why they took this decision at this time?
Yes, good morning, Ini. I think the main reason why is because Barclays wanted to raise some cash, and that's what it's done, raising over $600 million with this sell-off of Absa, which is a Johannesburg-based bank. And now, prior to 2017, it used to be called Barclays Africa, but Barclays have been selling off its assets over the past few years. So now it's got a 7.4% stake. Since the war in Ukraine, we know that so many European banks have come under scrutiny, particularly about their capital levels. We had that gloomy outlook, didn't we, over the weekend by the International Monetary Fund, and another one again by the World Bank yesterday. And they are not the only one. Standard Chartered, which has a pretty long history on the continent, is also starting to divest some of its assets. But in Johannesburg, on the Johannesburg Stock Exchange, after this announcement was made, Asper shares were down 5.4%.
Yeah, and Deloitte has been fined by the Financial Reporting Council. What's the offense?
Yeah, this is a really interesting story, and it comes at a time when the big four accounting firms across the world are facing increasing scrutiny, particularly Deloitte. It appears to be scandal after scandal each year. We don't have a lot of information about this case, but we do have one statement from the FRC, which says that in 2016, Deloitte in MIT's accounts contained a material uncorrected misstatement. That's really all we have. So we know that there was a big hole in their account. And of course, at the time, Deloitte was overseeing that. MIT is a huge outsourcing of company here in the UK. It trades on the London Stock Exchange. Last year, they had over £1 billion in revenue. And this is predominantly of looking after local and central government contracts. Most notably, they were in charge of the COVID testing centres. So you can imagine how much money they clawed in, and they're actually under investigation from the Competition and Markets Authority, so they appear to be in a series of trouble. But yes, Deloitte have been fined. It was actually £2 million, but because they were very cooperative with the FRC, that fine was reduced to 1.4 million. Yeah,
well, looks like they have a lot of explanation to do. Juliana, I will get more stories at 1:30 when we'll speak to you during Business Incorporated.
Thank you.
So let's go to another market now. Ladi, the crypto market, I know I think there was a rebound yesterday. I don't know where we are.
Yes, it's been, some kind of, seesaw move. We've seen Bitcoin actually ranging between that 38,000 to 41,000 level for a while now. Investors are looking for direction.
I think it got to about 42 in the afternoon.
Yeah, it got to 42,000.
I don't know, just like that.
Yeah, it's a serious seesaw movement, and investors are wondering, where is this going? Are we going up or are we going down?
You know, Ladi, when investors start asking what's driving the market, then we know we really have to look closely.
And obviously, we know geopolitical risk is, weighing on the market. We're seeing investors watching, what's going on, with the war in Ukraine, and that's impacting other markets too. So, not an easy time to be an investor. I keep saying that it's not easy.
You have to be bold to be an investor
this
bold. Time.
Yeah, looking at the fear greed index, for the crypto market, there we're seeing it at about 27 points. It's fear. It's an improvement from extreme fear. We're tending towards neutral at some point last week, but now the market is back in fear. Market cap $1.92 trillion. That's down about 0.25%. And we see the volume traded. That's plus Bitcoin and the altcoins. That's down about 11.36% this morning. Bitcoin dominance since at 41.17%. We see price of Bitcoin at 8 a.m. was $41,530. It's up about 0.21%. Volume traded in Bitcoin, $29.09 billion. And we see Ethereum there holding on strong to that $3,000 support. It's just shy of $3,000 there. It's down about 0.71. Volume traded in Ethereum, $16 billion this morning. And we see top alts per market cap is all green, but not double-digit gains, just single-digit gains and marginal gains we're seeing this morning. All right, let's bring in Bjorn Martins right there, CEO, Passive Income Token. Hello, Bjorn. Great to have you.
Good morning, Ladi. Good to be here again.
Good morning.
I'm on the video today. I'm on a little travel, but love to be on the show again, of course.
Yeah, I know you're on transit right now, and thank you for still, joining us. But, we've seen the crypto market looking for direction at this point. Today, it's above 40K. Tomorrow, it's below $40,000. And, investors are becoming quite, wary at this point. And now there's talk about Google search data showing that there's declining interest from retail traders, as crypto investors are searching for, that big, money spinner at this time. But how are you seeing this?
Yeah, I see it honestly as the real estate investors. They normally they get into in the hype moments, and they mostly also are the investors that sell on the loose moments. The excitement of the market is a little bit gone. We went already now 2 years ahead of the last halving. So we basically have been on the lowest point of the market. The market is a little bit boring at the moment. Not much is happening. We're still around at 40K. And this is a moment where the retail investors a little bit lose their interest. There's not much action on the market, so they cannot really go in quick and quick out. So they are now just watching on the sideline at the moment to really make the next big move to step back into the market.
Yeah, we know most of these, some of these investors like to buy the top, and when the hype started in the market. But what are the institutional investors doing at this point? Are they taking any positions?
And they are all looking at the moment to take a new position in the market, as they have seen as well that the bottom is reached. A lot of the demand numbers are showing this, and the ratio of the Bitcoin coming in and what's being bought is at the moment really similar. So I think honestly that we are at the bottom of a new bull season, and we will see very soon new retail investors jumping back in with a lot of institutional investors together.
Right, and now I'm hearing more talk about move to earn. We've been talking about play to earn, but now move to earn is becoming a thing. But how's it going with MetaBot? I know that's another play to earn platform that's been in the works for now, but how's it looking for MetaBot at the moment?
I would say for MetaBot itself is looking very positive, honestly. If you look, for example, at where you were talking about the move to earn, the negative carbon footprint that Steppen is doing, for example, is really something new in this space. And seeing these new innovations coming along will also give the attention that MetaBot deserves, as it's also a very innovative project. It will easily get attention. And for example, the demo and MetaBot's Metaverse will be ready in a month, so we can see some really great moves there.
Right, and a lot of platforms coming up, play to earn, move to earn. I wonder what the next one is going to be. But thank you so much, Bjorn, and do enjoy your trip.
Thank you, Ladi. I will see you next week again. Have a good day.
All right.
Bye-bye.
Okay, have a good day. All right, so looking at the top part of market cap there, we see it's mostly green, but we see eCash there. That's up by 0.43%, and XRP having a big move this morning. It's but still around the 70-cent range. It's up 2.90%. And we see ZRX there, one of the biggest movers this morning. That's up by 46%. It's back above $1.07. And we see Kava there, $5. That's up 15% this morning. We see Zilliqa. Zilliqa had an incredible move last month. It went up from about 3 cents, got as high as about 28 cents, and now it's trading back below that, but at 13 cents, and it's trying to get another rally, moving up 10% this morning. We see EOS there at $2.80. That's up by 8.86%, and SNX also up 8.03%. And we see Steppen. That one has had an incredible move. That's the move to earn platform, moving and making money. That's GMT there. That's down by 8.91%. It's had an incredible run also in the first quarter of 2022. It's trading at $3.22. Waves is down about 7.17%. We see also another big mover in the first quarter, Ape coin there. One of the Bored Apes token there. It's down about 6.58%. It's trading at $14. It was about $6 last week. Incredible move from that token. We see Sandbox. That's $2.86. That's down about 4.75%. That's the Metaverse token for Sandbox there, having a pullback with all the big moves. These tokens have had quite big moves in the first quarter. So looking at this market now, investors are still looking for direction, but there's still, some profit, being made with some of these altcoins. But at the end of the day, Bitcoin is the one everyone is, looking to for that next move.
Yes.
Is a bear market coming? or is it a bull market that's still, going to continue? But we know traders are quite, afraid at this point.
Yes, it's not just in the crypto market. I mean, even in equities around the world, oil is going from one side of the market to the other.
Exactly.
In just how many? Less than an hour? You see a lot of movement. So
everything is volatile at this point.
It's a volatile season in the world at this time. But you asked beyond one question. You've had play to earn. You now have move to earn.
Yeah.
I think we should have
moving.
We should have talk to earn, laddie. Don't you think, as broadcasters, if we'd had a talk to earn, we would make a lot of money.
Yes, that is, wow, didn't even think about that, but we should create some chatter.
Yes, and then,
that.
I mean, because we talk to earn a living, we might as well talk to make the other part of the money.
So be some kind of platform where you just talk and, but whatever you're saying has to make some sense.
I know, right?
For you to make money.
Don't worry, we'll discuss the platform, the name of the platform and all that.
Exactly.
All right, laddie, thank you so much. And that's where we say thank you so much for being a part of today's episode of Business Morning. We do hope it was worth your while. We'll do it again tomorrow. But before then, 1:30, Business Incorporated will be here with updates and developments in the world of business. I'm Ini John Mekwa.